All right, so good evening, everybody. So the what you see here on your screen, that's the FX hedging challenge. So what I'm doing here is something I've tested for some. Actually, this actually got me a bit concerned because I've been there, running into a hitch while trading and then finding myself opening counter positions and all that, hoping that eventually one will close. And sometimes I was lucky, it will close the buy and eventually go and close the sell. Sometimes I will be unlucky. More positions are, I kept opening and opening until eventually the account will be blown. So this has happened for several years until finally I was able to figure out, while I had to take a course and then learned, okay, this is just one of the strategies because there are several other better strategies on hedging. So what I'm going to be showing us is simple hedging and how it's done so that we can start with it, run with it. I've tested this for over a year and it works. It's just a few rules you need to observe and you see that you trade with peace of mind. No matter how the market shakes, you just see that ultimately it turns back. Now, why does it work? Why does hedging right work? It works because the market doesn't continue going in one direction forever. So, and you need to pick your assets, your trading assets or instruments well. So let's just get down it. First off, hedging is a risk management strategy employed by individuals, businesses, and investors to mitigate or offset potential losses resulting from adverse price movements in financial markets. The primary objective of hedging is to protect against uncertainties and fluctuations in asset values, thereby minimizing the impact of market volatility. Now, you want to really employ hedging strategy, especially when you are unsure of the trend, the market. The trend is your friend. So when you are unsure of the trend of the market, that's when, and then you feel you must trade. That's when traders begin to think of hedging. But one of the major challenges that traders face, which I'll talk about later on, is most times is that uncertainty. We still enter the market, and then the market goes against us, and we need to blow the whole air against our position, and then we need to open counter positions, and then some can now leave it open for a long time, some for days, weeks, months. So we want to see how we're going to stop that using what we learned from here today. Now you have classifications of hedging there. When you want to talk about types of hedging, there are several types. I don't want to get into that. You want to talk about maybe categories. There are several. I don't want to get into any of that because for time. But when you want to do classifications based on intricacy and sophistication, these are the two: simple hedging and complex hedging. Simple hedging just involves you pick, since we are forex traders, right? You just pick the currency pair that you want, right? And then you follow it and do buy, do sell. Yeah, although in some countries like in the US, there is a law that you can't hedge on the same instrument. For example, you can't buy on Euro USD and sell on Euro USD at the same time, but you are permitted to do cross hedging, more like you look for an instrument that is inversely correlated with the Euro USD. For example, Euro USD goes up, then that currency goes down. Now, if you want to look at such, you want to look at Euro USD and USD CHF. For most of the time, they inversely correlate. So, but then for us on this other part, we don't care about whether it's the same instruments. All the case, let's hedge it and hedge it right. So complex hedging will involve you bringing in, maybe hedge. Now you want to hedge, you start looking for other multiple assets, different assets that could inversely correlate, and then begin to run them. We don't want to get into that. So we just use simple hedging and cross hedging in the sense of us trading instruments, currency pairs. All right. Now, I've also tested this with gold, but if you want to do it with gold, actually, really, with gold, you make more profits quicker. But the risk is you have to have a lot of funds and you have to really lower your position size very well. In fact, it applies to even the currencies, lowering your position size. We'll come to that shortly. So why do many traders fail with hedging? Why do many traders fail with hedging? We have five reasons I've put down there. One is insufficient understanding of hedging concepts. One, they hedge because they hedge only when trades move against them, and it's it was not originally in the plan. It's only when I see that it's gone against me, then I'll now begin to look for how to salvage the position. Sometimes I now begin to hedge up and down, and eventually, in most cases, 90% of the time or 95% of the time, the account gets lost. Next failure concern is high transaction costs. When you talk about the spreads, you talk about swap, you talk about commissions. Now, if you hedge a position and the position you couldn't wrap up within a day, definitely you're going to pay for swap, which is why the solution to the swap is going for non-interest accounts, like you have in InstaForex Islamic accounts. Then there are other brokers that are offering similar stuff like that. And then commissions, go with a broker or an account that doesn't charge you commission for opening positions. Spread, you can't avoid spread, but you can see broker that really will give you better spread, fine. But when the flex fluctuates, sometimes it can be an issue. So that's why I personally prefer a fixed spread. That's why I use the broker I use for this, right? So when it's fixed spread, at least you know where everything will add up together. There you're out. The next is overcomplication of strategies. Some traders fall into the trap of overcomplicating their hedging strategies. So when you now employ too many instruments or implementing intricate hedging structures, it can lead you to confusion and increased risk rather than effective risk management. What this means is I will recommend you to start with one or two, maximum two currency pairs and understand it. Don't go and begin to put too many things into it. Another complication issue is you are hedging on that account and then you are bringing another strategy into the same account. It will create complication for that. So that's why I recommend you dedicate an account for each strategy. For hedging now, have an account to, like the money you have in this particular account, let it just be for hedging. Don't try to bring any other strategy into it. If you want to run any other strategy, have a different account for that. You get it. So another thing is market timing challenges. That what we're going to deal with it, all right? Because sometimes you just wake up and find out, price has got here, has opened this one, and you never really prepared for it. Hedging, it will take you some time. You need to put in some work to really time everything. Timing is very, very important in markets. Poor timing, opening or closing hedging positions can result. For example, now he has given you the profits. You still want to know what you're still looking for. Maybe you're still looking for more profits. Maybe that could be a result of greed, or you don't understand that price doesn't continue going in one direction forever. And then the profit will now turn to a losing trade. You have to start waiting and waiting and waiting until you recover. And that one is psychological impact. Hedging can introduce psychological challenges, especially when traders face conflicting signals from their primary and hedging positions. Now, yeah, you can open positions and they go against you in hedging. Yes, you have drawdown, but you need to have this understanding about, market ranges. For example, you know that, okay, let's say for GBP USD, when you study history, I think except for unforeseen situations, circumstances, maybe natural disasters and all of that, you notice that GBP USD maximum it can do in a day in one direction is maybe 250 300 pips. Okay, so within that period, it will still retrace, go up and down. You can find your way out if you think that you can't stomach, the further movement in that direction. But other than that, after 2-3 days, you see it coming back in your direction. So which is where you need to cover it in terms of swap. You need to also be covered in terms of your position size. All right. So that's why you need to handle this. You need to take care of this, particularly this last one, because in trading, risk management actually contributes to like 20% of your success. Your strategy, like hedging now is a strategy, contributes 10%, but this remaining 70% is your psychology, your mindset. If you're able to manage that 70%, you will find out that you're always on top. But for you to be able to manage that 70% of psychology, you need to manage risk management well. All right, your strategy may just be average, but if you manage risk management well and manage your psychology well, you see that you turn that strategy to a golden opportunity for you. All right, so let's quickly get down to the setup. The setup, we have 3 time frames, the daily time frame, where we find and mark all the tops and bottoms as far as we can see on the line chart. And then we switch to 4 hours time frame, where we have it on candlesticks and then adjust the tops and bottoms to balance. And then we get to 1 hour where we now create the hedging zones, where we now place our buy and sell orders. Next is our hedging trading plan. You need to have your trading goal. Okay, is it now? Let's bring the goals down to targets. For example, in a not per trade now, as you have opened your positions within a day, for example, what I recommend doing is on a daily basis, 2%. So, and I want to run positions that I can close within the week latest by Friday night. So if I do 2% per day in a week, it's about 10% on average. But if you do it by pro rata, meaning that if I do 2%, or if I'm able to close on Monday, I do 2%. So if let's say I have 100 now, and I do 2%, that's 102. So by Wednesday, I'm going to work out 2% of 102. And there's a website normally I want to use to do that calculation. I think I will try to open that website for us. Let me see if I can open that website so that you will also see that. I know that I've covered that website in some. Okay, let me share my screen. Let me share my screen so that we can just go to the website quickly. All right, let me share the screen. I'll come back to that, to the what's it called? I'll come back to the platform, to the slide before I continue. Compound Daily, compounddaily.org. Right, so that's the website. You can actually put your, input and know what you want to look for. So let's say by the time we start this challenge now, because we're going to start this challenge tomorrow, you have 100 there, and then you are doing 2%. I hope you can see the screen, compounddaily.org, right? Confirm for me, please. Can you see the page, Compound Daily? Can you see the screen? Confirm for me. All right. Okay. All right. Great. Thank you. All right. So now, so we have 100 now. So let's say we do 2%, 2% daily, and let's say we want to do for 10 days, 10 trading days. So if we begin tomorrow now, that means up to Friday is 9 days. Then next week, 4 days rather. Next week Friday will be 9 days. Then the upper Monday will make it 10 days. And then we want to reinvest everything 100%. So we do 100%. We want weekends? No, of course, we don't trade on weekends. So when we want to start, let's say we start on the 5th. So if we do 5th now, so that means to start calculating from tomorrow. So let's click calculate. So you're going to run it from tomorrow now. So by the 10 days now will be on the 19th of February. And by then, if you look at the calculation now, everything would have grown to 121.89. So that's what we'll be looking for. So if you now scroll down further, you'll see what it will give you. You can see that on the 6th, if you do 2%, you have 102. The next day, 2.04, you have 104.0. So in that regard, so you now know that, okay, by this Friday, which is 9th, all right, we should be having 108.24. So if you have 105 or 101, you just plot it so that will give you an idea of what to expect. All right, so let me go back to the PowerPoint. So I'll wrap up that PowerPoint and go to this. So now you need to have your trading goals, right? So let's say 2% daily. And then our trading strategy, of course, we have a hedging strategy. Like I mentioned earlier, use just one strategy for one account. Don't bring in any other strategy into this so that you don't complicate things and get yourself confused. Because hedging, when you have a drawdown, it can, if you are not confident, it will devastate you. And now think of it now that you have, I'm going to show you one account so that you see what I mean by that. I'll show an account, you see what I mean by that. So if you don't, if you not mix it with any other strategy, that can complicate things and it will make you cut off your position and lose out on the opportunity when it begins to rise in your favor. All right, then your trading routine, decide when to analyze the market. That's when you now come and say, okay, have there been any new high made, any new low? to adjust, and then you make the adjustment, decide, maybe it's early in the morning or late in the night. When do you now execute? As immediately after run the analysis, I now add the open positions I need to open, or the position that I've closed I need to reopen. And then when to evaluate, you come back to evaluate, okay, have I made my 2% or more cut? Then your trading mindset or psychology, you need to maintain a state of mind that is always positive. Always make sure you are confident when you're in the markets, consistent with your strategy, committed to the strategy, and contented with your results. Your actions also. And never you ever entertain fear, never entertain anxiety, never entertain greed, never entertain revenge. Now you may come back and you see that, hey, the market has moved in your favor. What was negative before is now giving you like over 10% in one day, over 10% in one day. Hey, at that point, don't say, let me let it wait to see whether it goes to 20%. No. With that already, you have overachieved you almost achieved the target for a week in one day. Cut all the trades, close all positions, and rest. Tomorrow, you can now come and adjust and open new positions. Excuse me. So please always take note of that. Now let's look at the hedging rules. The hedging trading rules. Number one, the trend. Now remember, when you want to start hedging, you are not so certain about the trend. All right. So the market may be moving sideways. Set it up. And then when you discover the trend, follow the market structure. Don't be lazy in your analysis, but always keep things simple. Right? Then risk management. Use the right position size for your account size. Now, with 100, ideally, I would have said, okay, use 0.02 or 0.03. But then if you want to use 0.1, fine. When the drawdowns come, please just brace up for it. Don't chicken out. Okay? If you are using 1,000, now let me just say 1,000 with this broker, you are supposed to be using 0.1. All right? Don't even try to use more than 0.1 for 1,000. For 100, yeah, I can still manage 0.1, but it's a high risk. Because it's small, I can afford to take that kind of risk. But as it's growing, if it gets to 500, I'll still be using 0.1. If it gets to 500, it's still 0.1. Even when I'm using 20-something, 30-something, I'm still using 0.1. The reason is that for me, if I can use more money to grow it big, why not? Because it can happen. So, but once it begins to go higher, I don't joke with that. Make sure 1,000 0.1, 10,000 maximum 1.0. All right. Then always have a daily, weekly, and monthly targets and stick to it, like I mentioned earlier. And then your trading psychology, never panic, no matter the drawdown. Never you ever panic. And start with maximum of 2 instruments until you master the entire system. You can use USD, Euros USD, USD CHF, or USD JPY. I even use Euro JPY and so on. But gold, I've done gold, but gold, you need enough funds. I've mentioned it earlier, you need enough funds. Maybe if you have 2,000, then be trading gold with 0.01, the lowest of loss sizes. And make sure you cover lots and lots of targets. So let's quickly get down to the setup quickly. Let's go to the setup. I'm going to start with this. Okay, so I'm going to start with this. So let me connect to, okay, let me connect to this one. This is, okay, let me start with this demo. First off, before I get to that one, let me show you what I mean. You can see this drawdown. You can see the account. See drawdown. See drawdown. Let me scroll up. See drawdown. Now you'll be surprised that by the time I wake up in the morning, this thing would have turned around. See drawdown. You can see positions waiting to take trades. You get this is the drawdown, current drawdown. Look at it, right? I will still go to sleep. I will go to sleep with this and all that. But then, because I have 100 here, guess what? So I'm not bothered about it. But if it's you can see the loss size 0.1. Oh, but once it begins to grow higher than this, get to 500, it's still the 0.1, 1,000 0.1, and all of that. So I won't get more than that. So, but let me get to the one I want to use to show the setup. Okay, let's use this for the setup quickly. Okay, so you can see my screen. So I'm going to switch to the daily time frame. Okay, fine. So, and I'm going to set it to line charts. All right, so it's on line chart now. Okay, so now what we are going to do is to first off use we're going to use the horizontal line first. I will need to, let me even make this, let me clear this. Good. So this is on the daily time frame. So we'll look for the tops and the bottoms, and I'm going to be making this green. So I'll use green for that. Just okay, let me use spring green, right? Then make it a little bolder, right? So next, I'll find another bottom here.
Calm down. No pressure.
Okay. Okay, so next. So I'm just going to be picking all these. So as I pick, I'll just pick as much as I can. Pick as much as I can. So anywhere you see a top, you pick it. Anywhere you see a bottom or valley, you place your horizontal line. And now when you are, by the time you start working the distance between each of these lines, all right, to set up your hedging zones, from one green line to the other shouldn't be more than 250 pips and shouldn't be less than 50 pips. From one green line to the next shouldn't be more than 250 pips and shouldn't be less than 50 pips. Take note of that. So which instrument am I using? Okay, this is GBP-USD. Okay. So yes, okay. So I think I've covered the much I can for now, based on what I can see. If you want to do more, you can actually scroll further down, like here, because a time may come when this will come in handy. So, but now this thing that I'm doing, I know it can be tasking, can be an equivalent task, but I've simplified it for you already. So you just get the templates, like what I've done now, okay? And now after that, I'll switch to 4 hours and then switch to candlesticks and then begin to make adjustment like this. I just make this adjustment to this, okay? And then this one, I'll find adjustments to this. So you keep on adjusting on and on like that. Okay, but to make it easy for you so that you don't have to go through the stress of doing this, what I've done is I've included the templates. I've included the templates, all right? Like now, let me just open another one because we'll still come back to it. Let me open a USD CHF, okay? And then open a template for USD CHF that I did here already. Let me say, okay, good. So you can see the templates. So you have this template, and as you have this template, all you just do now, on each time, if a new high higher than any of the green lines happens, the following trade day, you may want to adjust it. And now, so we are going to be coming here once a day, find the time on the group, and then we will just come spend 15 minutes and look at the charts and make adjustments where necessary and adjust our trades. Okay, so with this now, what I'll do, okay, like here now you can see, because I think this is just a new one. So this one is here. Now, if you look at from here, look at this, from this place to here, it's around 51 pips. So it qualifies. From here to here, it's around 73 pips. So it qualifies. From here, from this green one to this next one, it's 113. It qualifies. Okay. But now a new low was made here on Friday. So can I add a new green line here? Let's see from this bottom of these two. From here to here is 51, it qualifies. But from here to here, it qualifies also. So I can now add a new green line here because price will come here and find support. You see where it is up here now. So I can now, let me scroll up. Can see the templates, can see all the green lines are plotted long ago. So I can just come here and pick these ones because I want to add it here. This for the sell line, I'll talk about that shortly. Then this is the green line. That's the hedging line, the support and resistance line. So Now you have this one, which will now serve for a buy line in the buy zone. Okay, so I just expand this again. So what we now have here, so I can just check the low of this, which is 0.8550, while the low of this is 0.8552. So I'll use the low of this, 8550. Okay, and this thing should even be, let the ray show up. Remove this ray so it can show. Okay, so I can also bring this, just change the line here, okay? Okay, so that's it. Now, this one, to let the ray come out. Okay, now, where I now place this blue line will represent our buy level. And then what you do is just put it 10 pips away from the green line. So if you look at 0.5550, it will just be 0.5560. So 0.560 rather, 0.560. 10 pips away from that. That is it. So that's where I will not put the buy level. So when price comes to this place, it will pick a buy. Then while the red one now will be 10 pips below it. This one will not be 10 pips below it, so it will not be 540. So, and let me move the ray background. So, okay, so that's it now. So, like what it is now is what it is. So I will now just quickly set up a trade. Now, what you have here now are the hedging zones. Now, if you look at this, you can see that this is 0.8728. Up above it is 0.8738, 10 pips above it. Below it is 0.8718. So between the sell level and the buy level is 20 pips. So what each of them is serving is the stop loss for you, but it will take you out of the trade. So by the time you now do that, at some point you now find that there are some positions that are maybe like some. If you do like at a point, you may have two, buy and sell running. At some point, you now go and close. For example, let me just set up a trade now. Look at this. The buy here now should be 0.8688. So let me quickly set up this trade. 0.8688. Buy limit 0.688. Then the take profit will be here 0.8718. 0.8718. So I place that. The next thing I will place will be the sell, where the take profit is. I'll put a sell limit there, which will be at 0.8718. 0.8718. Okay, so the stop loss will now be where the entry of this one is 0.8688. So now this is just a typical example. After that, now we are going to open a sell stop below here, put the target here, put the buy limit here, put the target here, put the open on that one here, up buy stop up here, sell stop here, target, buy limit here, target up here, buy stop here, target will be up here, sell limit here, target will be below here. And that's how you just open all of these places. You have red, blue, green, red, blue, green, blue, red, green, blue. These are the hedging zones. You must open positions in all of them. Don't be lazy on it. So once you open them, so that no matter the volatility of the market, you are filled in. But for this now, I'll recommend you do 0.01 or 0.02 or 0.05. But if you want to do 0.1, fine. But if you do a lower loss size, that'll be better for you, so that no matter what happens, you sleep gingerly. Even with 0.1, you can sleep gingerly. But it's just that you must not be greedy about this. 2%, you close all positions for the day. And then wait for the next day, open again. If you do 2%, if any day doesn't do 2%, allow it to roll over. The next day, you may wake up and see 5, 10% already. Close everything and wait for the next day. That's the strategy. I will stop here and take any questions in the next 2 minutes. Any questions from what I've done so far? Question? Question? Any question? All right, in the absence of no question, I'm going to upload this and drop the link for you, and then give you access to the other materials so you can study them, and then we'll begin to every day we'll schedule to. Now, the effect of news. Yes, on the effect of news. News is even a good thing for the strategy because there are sometimes you open this thing, the market is just ranging, it can be so boring. But when news comes, it makes the market exciting because you have covered all the positions. And once you just see news, sometimes the news can make you have heavy drawdown that you are covered. That same news can also turn it around and give you maximum profit. Like NFP, the market was so quiet on Thursday, Friday, into Friday early morning. So by the time the thing opened, one of the accounts had done almost 15%. Almost 50%, the small account. The small account can do that, but the one of 1,000, 2,000 plus, those ones were doing maybe 10, 15, 10, 15. But this one, because of the loss size, because it's almost the same loss size for the other one. So, but the smaller ones were doing almost 50%. Because remember, I told you the risk is higher with the smaller ones, $100 and below. So news is good thing. It's a good thing for the strategy because it allows the trades to open and fill in smartly. We're going to be experiencing this as we progress because we'll just be finding time. Maybe we'll discuss on the group, on the platform there, to know what time will be convenient so that we'll just come on board. 15, 20 minutes, we'll look at what the market is saying together, see any adjustments, and then we take trades. When there is news, we'll all come watch the news together. We're going to, be doing this 10 days. All right. So I think at this point, if there's no other question, I want to call off the meeting. And then what we are going to do is that tomorrow morning, I'm going to drop some levels. I will drop the templates for us. So you can begin to just copy the templates, put it in your, I'm sure you know how to do that. You just go to data folder. From data folder, you copy the template I'll give you, and then open templates and paste it there. Once you paste it, you can now access it from here, templates, bring it in. For instance, if I bring in any other instrument like Euro USD, let me bring in Euro USD, for example, chart window, Euro USD. So as soon as it opens, I'll just bring in the Euro template, and there is it. Okay, so I'll just begin to now adjust it to suit my plan, like this. So we're on 1 hour already. So all I'll just do, begin to now check, okay, if I check from here to here is 28 pips, to here 41 pips, to here is 60 pips, I can take it there. And then if I take from here, so from here, back down here, it's not up to, so that means we will leave it from here to there, because if you take 60 pips from here, and then 40 pips cannot enter here, so leave it the way it is. So the same thing applies here. So I'll just make this adjustment. So that means you don't need really to make any adjustment on this. Just set up your trade, adjust this a bit. So you have your buy limit here, sell limit here, buy stop here, sell limit here, buy stop up there, sell stop here. If you scroll down, you still see further levels. So that's the way it is. All right. So in the absence of any other question, we'll call this a day now. I'm going to be dropping you these through tools and drop you the link. By morning, I'll drop you the link to this presentation. As soon as it uploads, I'll drop it. And then I'll be uploading the other videos so that you can take them step by step. So but what we'll do is in the platform there, we will agree what time tomorrow we'll meet. But I think I'm suggesting by, tomorrow is Tuesday, right? So I'm suggesting maybe we can meet by 11:30 to just review things. There are sometimes our meeting should be earlier so as to have already set up the trades early enough. But go through this first, insert the templates first on your platform, and then begin to make the adjustments. And I'll give you the videos to also watch so that you'll be able to get more conversant with this. This will take away the stress of you opening positions that will drag and make you go hazy. All right. So thank you very much for your time this evening. And I want to promise you it's going to be an interesting experience as we start the challenge. So what I will do is that, first of all, I'll confirm and make sure that you have set up, everything set up. Then to now set up the trace, maybe we'll just have another, we'll just decide, okay, maybe in the morning, we'll all open here together, set up our trades, all right, and then allow it to run. We'll now begin to give updates on the platform on what is happening to our trades. I think that's where we're going to do it. So let's see, tomorrow morning first, by what time, let's decide on the platform, what time will be convenient that will come on board just for 20 to 30 minutes. Then we'll look at, okay, let's set up our trades together and then let's start running from tomorrow. So thank you very much for your time and continue the conversation on the platform. So you drop me your own convenient time on the platform. Let's agree what time we'll meet tomorrow to do our setup. But I'll drop the template for you on the platform right now so you can download the template and put on your own. All right, so see you on the platform. All right, thank you very much. Thank you, thank you, thank you. So let's go and continue on the platform with the conversation.